Hello and welcome to the Good, Bad, and Ugly weekly review for the week ended 13th of December. A week where Nifty was choppy and it was difficult to really gauge where the market wants to go. We'll talk about this. But first, a reminder that if you haven't checked out the portfolio momentum health check report on weekend investing, you can do so. You can go to the website, you can use the QR code here and go to the utility, upload or enter your uh, stocks and the quantum of your stocks, and the system will essentially send you a report telling you about the momentum score of your portfolio, how healthy it is from momentum perspective, and if you have any concentration risk in your portfolio, etc. It's free. Do make use of it and get insights from that. From our research desk this week, we had all these superb content pieces highlighting strong sectors in the weak market, how India is perhaps not a bubble market, how markets can give very lumpy returns over long periods of time, how India is remaining in the top of emerging markets list, gold as an insurance to your portfolio, India manufacturing coming of age but long way to go, gold not being overpriced from this perspective. Uh, the narrative usually lags prices. Bhav Bhagwan insights there. Riding your winners, cutting your losers, some case studies there, and some tangible asset allocation advice. So a lot of different kinds of market insights are there in all this research. And we also do some Sunday specials where we do a deep dive into some data, do data analytics, and try to see what data can tell us in terms of how things are changing this week. How stock markets have changed post 2009 versus earlier is something that you may want to see. This launches on 15th of December. Please do always read the disclaimer fully and do subscribe to this channel if you haven't so far. On the hourly chart, you can see Nifty barely moved from last Friday close to this Friday close, but there was reasonable action during the week. You can see four sessions of nothingness, just mild consolidation Monday, Tuesday, Wednesday, and Thursday. And then on Friday, you had a massive down move, breaking down supports. In the first 2 hours, it seemed like, this is the end of this rally that we were seeing. But a complete U turn, a V shaped recovery from the third hour onwards in the market. And not only did it recover back the day's loss, but also went to the week's high uh, in this move. So, this is telling you what a strong undercurrent that exists, which is going to buy on dips as of now. Nifty 0.3% for the week, but overall, the week has gone with a signal to the market that market participants that the market is not weak. On the daily 200 DMA, if you remember a few weeks back, we had touched the 200 DMA, rather reached the 200 DMA and then recovered from there. And from then onwards, also, there have been two sessions, one previous Thursday and this time on Friday, where sharp recoveries from lows have happened on the same day, which definitely signifies that the market is not weak as of yet. Market is very well above the 200 DMA, above uh, its recent supports, and is, in my view, looking forward now towards an all-time high. The weekly chart also looking reasonably good, I would say. This entire week was within the candle of the previous week, so it is an inside week. Unless we break the previous candle low or high, it may not move either way. But given that we have very quickly gone from 23,300 odd to 24,800, it may take some more time to go much higher, but it certainly looks like the path is towards an all-time high. That's the sort of message from the weekly candles that we have. S&P 500 on the global mother market front also has dropped a little bit this week, 0.64% minus, but just look at the single way rally that is happening from October of last year. And pretty much if the US market continues to rally, it will be very difficult for other markets to not at least remain stable or go up. It is usually not a contra outcome that US markets are rallying and Indian markets are falling or otherwise. Gold is also reasonably stable. Gold, of course, has given up some of the gains this week that it had achieved. Uh, in Indian rupee terms, it almost went to 78.84 and has closed at 76.49, up 0.7% for the week. Still looking good. but it looks like it is consolidating here. The next move may take some time. Dollar index is the one which is really driving liquidity flows, foreign flows towards emerging markets, towards precious metals or not. And after a brief down move, dollar index has come back up again. And if dollar index continues to move up, breaks up beyond this support, I think we may see a lot more selling in precious metals and in emerging markets, as money will tend to move towards dollar denominated assets. Uh, Benchmark indices overview. So three for the 1 week gone by, mid cap index up 0.38%, Nifty 0.37%, Nifty 500 0.2%. So really no gain anywhere, and no losses also, 0.1% down on Nifty Next 50 and Nifty Small Cap. If we see on 1 month basis now, all indices are nicely in the green. On a 6 monthly basis, we are all again in the green. On a 1 year basis, definitely doing very, very well, with Nifty Next 50 at 42%, small caps at 34%, Nifty mid cap at 30%, and Nifty at 18.4%. If we see long periods of CAGR, then Nifty at 15.44 for the last 5 years is great, is slightly above the historical average, but it is not really in any balloon territory, as a lot of people would want to think. So 15% versus the 12.5% long-term average is healthy gain, but nowhere near bubble. So that is something that we have to keep in mind, that on every dip there will be buying that will come through, because we are certainly not so overbought. On Nifty sectors basis, IT stocks did very well this week, 2.9% gain, and there were several sectors that did between 0.5% and 1% gain. And you also had public sector enterprise, autos, pharma, central public sector enterprise, oil and gas, FMCG, energy, PSU banks, all losing about percent to 2%, and media dropped dramatically at 6%. If we see, let's say, over the last 1 year period, you can see only media has done badly. FMCG and private banks are sort of the worst performers of the last 1 year. Uh, and real estate and central public sector enterprise, IT, pharma, these have been the best performers at 36, 37 to 45% kind of return. So this sector rotation will continue to happen, and you need to have a strategy that will keep you with the best performing sectors of the markets. Right now, IT, real estate, services sector, financial services, these are the places where the best overall momentum scores remain, and you should look for price drops in these sectors to get in if you are a discretionary investor. On the FII DII stats this week, we have some buying from FIIs on 2 days, uh, but on the rest 3 days we got selling again. So 1800 crores, 1000 crores, 3500 crores of selling, and only buying in 724 and 1285 on 2 days. DIIs have been reasonably consistent except on Monday. So the money that uh, is coming in with a reasonable consistency. Now, what is also happening in the market is a lot of IPOs are coming to the market, a lot of runways there for IPOs for the rest of the financial year also. So as new primary issuances keep coming to the market, they will absorb a lot of liquidity from the system. So if let's say some Vishal Mega Mart is coming to the IPO of 8,000 crores, so it will suck in that kind of liquidity from the market into that stock. And there may come a point of time in the next 1 quarter where a lot of these IPOs would have practically sucked in whatever liquidity was floating around, and that will then cause some sort of a lull or dullness in the market. So far, not yet seen. We've seen some big IPOs come through, Hyundai and many others. So far, that they have gone away nicely without really damaging liquidity to the markets. In this last 1 week, there were several stocks that did well. So strongest stocks of CNX 500 were ITI at 29% gain, commercial engineering 15%, delivery, Godavari Power, Chalet Hotels, BLS, Varroc, Titagarh, Raymonds, and Century Ply. These were the top gainers in CNX 500 index. And you had some losers also: Godrej Consumer, Aegis Logistics, Honasa, Piramal Pharma, PBR, Jyoti, Nalco, Signature, Sapphire, and Jubilant. So these are some of the top gainers and losers. You will find that the losers stocks will gradually exit your momentum portfolios, and winners will gradually enter. That will be the sort of normal progression of these stocks that you will see in your portfolios. So this is all I have for the good, bad, and ugly weekly review for this week. I hope you liking this content. Do comment below and say what more you would want to see in these videos. We'll try to incorporate that. Do share these videos with your friends and family, and do give us a like button. Press the like button if you do like these videos, and subscribe to the channel. Thank you so much. Bye bye.